7th of June 2010, and we're happy with that positioning of the 18-month trough. So let's go back to our expert model editor, and we can zoom in the same way that we do on other charts, and you can see here the same information displayed at the bottom of the chart. There we are. That is the 7th of June, and so by double-clicking in the upper zone, the top zone, in other words here, I'm telling Sentient Trader that I want to position a trough of the top cycle, the 18-month cycle, over here. Here we go. I double-clicked. Okay. It asks me about the expected trough range. In other words, it says, please give me a range of dates. It doesn't want to be told one exact day, because often that makes analysis really complicated. The usual thing that I do is I trim this range right down to about 3%. And you can see that gives us a range of only about 16 bars. Maybe that's too tight. Let me make it 5%. And we've got 27 bars. I can up it here and go up to, let's say, 38 bars. I click on the OK button, and Sentient Trader plots these sort of inverted curves. Now, this is a period of time during which the 18-month cycle and, of course, the synchronous 40-week and, of course, the synchronous 20-week cycles are expected. Okay? So we're saying, according to our opinion, these cycles are expected over here. All right? We've given Sentient Trader a range of time, and the highest part of that peak is where the most likely date is for that particular trough. Now, we want to tell Sentient Trader where to position the 40-week cycle. So let's go back to our chart. And where do we want to do it? We want to, instead of positioning it over here on the 10th of January, we want to position that trough over here on the 14th of February. Go back to our expert model editor, and we find the 14th of February. Oh, I beg your pardon. I think I've zoomed into the. Wrong. I'm zoomed into the wrong trough. So I put that 18-month trough in the wrong place. That was. Have I? No, I haven't. What have I done here? Let's go cancel, and I'm doing this on, let's see, that was June 2010 and January 2011 up to September. Let me go through a process again. I'm sorry, I have too many charts in this workspace, and I think I have loaded the wrong. Let's call this the Euro US Dollar Trader Chat Attempt 2. Here we go, and let's position this, there we go, let's position this over here in June, and I double click over here, and let me make that 6% or something like that, and there is where we expect the 18-month trough. Now, we expect the 40-week trough not here at this prominent price trough as discussed on the 11th of January, but here in early February, 14th of February, in fact. Now, where do I click to tell Sentient Trader to position a 40-week trough? I can click in the 40-week zone. Let's assume I'm mistaken, and I double-click over here. That's again 18-month. So Sentient Trader is now positioned an 18-month trough over there. We need to get rid of that. How do I get rid of it? I right-click and I delete that trough range. That trough range is now gone. I now click in the correct place. That's for the 40-week trough. But now I want to give it a very narrow range of time, because I don't want it to find that trough in January as the trough. I want it only to find the trough in February. So you can see my range start is 7th of February until the 21st of February. That's perfect. Click on OK, and there is that trough range for the 40-week cycle, not for the 18-month cycle. It doesn't appear up here at the top level, only down here at the bottom level. Now, let's help Sentient Trader perform this analysis in the way that we want by positioning the 20-week cycles as well. Now, we can roughly position them by using the measuring tool here as well. Here is 19 weeks from that first trough, and if I measure, that's 16.7 weeks. So I'm going to tell Sentient Trader that we are expecting the 20-week cycle here to have been a straddled trough, which occurred. Click in, of course, the bottom zone there, which occurred somewhere over here. And let's position the next 20-week trough. Where would that have occurred? Well, let's measure 20 weeks from there, and let's say that that's 98 days. That's too early in my opinion. That's 17 weeks. That'd be perfect, but then there's some unusual things happening here. So let's position it over here, 21 weeks. Double click over there. Let's make the range a little bit tighter, and click on OK. All right. So there we have an expert model. That's what an expert model is. It is telling Sentient Trader where to position the troughs of the various cycles, the 18-month cycle, the 40-week cycle, the 20-week cycle, and of course because of the principle of synchronicity, the shorter cycles would be positioned at the same places. So that's why the 20-week cycle sits here underneath the 40-week cycle, which is underneath the 18-month cycle. I simply go add exit, and then I go analysis, expert, and assign to chart. Okay. Now, here is the expert model that I have just created, Sentient Euro US Dollar Trader Chat 2 20-week resolution expert model. I click on OK. Sentient Trader tells me that that's going to require an updated analysis. Do I want to do that? And I say yes, I do want to do that. And it performs an updated analysis. We'll wait for a moment while Sentient Trader performs the updated analysis. An analysis which is performed using an expert model can sometimes take a little bit longer because it has to consider several more things. There we go. It has completed the analysis. Let's turn on our semicircles. And the semicircles make it very clear. And let me use the whiteboard to emphasize the point. Here is, of course, our 18-month trough over there, and then the 40-week cycle you can see is coming down to a trough over here, which is exactly where we wanted it to be positioned, at that trough in mid-February. Okay, so I've told Sentient Trader to position that trough at in mid-February. It has also positioned my 20-week cycle trough over there, which means that it thinks that this trough, the price is formed on the 12th of September, is in fact a trough of the 80-day cycle. There is our nest of lows representing 80 days as the longest cycle that's in there, this cyan one over there. And so therefore this trough that has just been formed on the 12th of September is in fact a trough of the 80-day cycle, not a trough of the 18-month cycle. When is the 18-month cycle expect? Well, according to this analysis, that trough of the 18-month cycle is now only expected in November. I'd like to point out something which happens as a result of this new analysis, and let me turn off the semicircles, and that is that this nest of lows, the inverted pyramid that I spoke about earlier, is now looking a good deal more vertical. Those troughs are a lot more synchronized. They are expected, very much within, a very narrow band of time. So for that reason alone, this analysis looks much better. However, there are reasons why this analysis doesn't look so good. For instance, notice here at the 20-week level, an inverted cycle pattern. That's because of this straddled trough here. The midpoint comes down below the edges of the cycle. Here's the one edge, and there's the other edge, and the middle comes down below it. That's why it's an inverted pattern. So that is possibly a warning that this analysis isn't as good as the other one. Now, I hope I've demonstrated that creating an expert model is very simple. It took us a few minutes to do that. Once you get the hang of it, it really is very, very simple. And you can tell Sentient Trader how you want to analyze the market. As a matter of interest, if you go to Analysis, View, Phasing, Comments, you can see exactly what Sentient Trader did when it tried to apply your expert model. It first of all tells us the expert model has trough ranges within the data period. Then it gives you lots of information that it used while it was performing that analysis, which was very important to Sentient Trader, probably not very important to you. It says here, entry generated by expert model has an acceptable rating, 428 out of 367 to 390. This model, generated by expert model Euro US Dollar Trader Chat 2 Resolution 20 Week, is being used as the only entry model. Anyway, and then talks about phasing analysis extension. It gives you lots of interesting information. It says here, also, those Sentient traders found potential recent troughs for the 18-month cycle. Sentient trader is ignoring them because they are not supported by the expert model being used. If the recent phasing seems incorrect, you should reconsider the application of the expert model, and so on and so forth. Sentient trader always thinks it's right, of course, but when you present it with an expert model that disagrees with what it thinks, it's going to ask lots of questions and put things like that up there for you. So that makes for some interesting reading. If you've created an expert model that Sentient trader refuses to accept, then the answer will usually, well, in fact always, be found within this commentary. You'll find that for some reason or another, Sentient trader has rejected your expert model, usually because your expert model requires it to break basic Hurst cyclic principles. And the most basic cyclic principle that Sentient trader will refuse to break is it will not allow a cycle to be less than 65% of its nominal length, and it will not allow a cycle to be greater than 150% of its nominal length. If you have an expert model that requires that to happen, then it will reject your expert model. So there we go. We have a different analysis which presents an alternative analysis and is possibly a very viable analysis, and certainly gets over the problem of the fact that we are calling the 18-month trough too early, which is something that one has to be very careful of doing. So I hope that has demonstrated to you how to create an expert model, or to put it in simple terms, how to tell Sentient trader how to analyze the market according to your opinions. I know there are some questions there. A question: do you use trading days or calendar days, or can you use either or? Absolutely and adamantly, we use calendar days. The reason for that is because Hurst cyclic principles are based on the fact that price movement is moved by cycles which move over time. They do not move only when we happen to be trading the markets. When I'm taking a summer holiday, or when we're all taking a summer holiday and not trading the markets, then the cycles which move the prices continue to move the prices. It's a very, very important aspect of Hurst cyclic theory, and it answers questions such as let me open up a short-term chart here. Euro US dollar. Let's take a look at what should we take a look at? Let's take a look at the hourly chart. Okay, and all right. So so there's the market moving. If I zoom in, then of course there are gaps in the data. Those gaps are the weekends. Okay, and according to Hurst cyclic principles, cycles continue to move through time. They are linked to time. They're not linked to when we have weekends or don't have weekends. In the United Arab Emirates, a weekend takes place on Friday and Saturday, and Sunday is a normal trading day. So the cycles continue to move through Friday and Saturday, regardless of when we're taking holidays or when we're taking weekends. So that's an absolute fundamental tenet of Hurst cycling.